In this video, I'll take a look at pivot points and what exactly they are, how to use them in your trading. So the pivot point is a mathematical calculation which figures out the pivot of the previous day, where price should be attracted to. So it's the high plus the low plus the close of the previous day divided by 3. You then have 3 resistance barriers and then 3 support barriers based upon the pivot times 2 minus the low. For the R1, resistance 1, resistance 2 is pivot plus high minus low. Support is pivot times 2 minus the high. Support 2 is pivot minus high minus low. None of that truly matters, but just to let you know, there is a mathematical equation behind all of that. This was developed by day traders in the pits in Chicago. They used to use this as a way to perhaps try to fish out specific support and resistance levels going forward. The problem that you do have is that Forex is a 24-hour market, and therefore you have to wonder whether or not you can rely on it. That being said, some people do, and they swear by it, and that's fine. There's nothing wrong with that. So based upon the mathematical equation of the previous day, this was the pivot point. It's probably worth noting that it did, in fact, offer support. You know, we started here. The market did find its way back down there. So some people would short on the idea that it's going back to the pivot. More likely than not, what they would use this for is resistance and that as support. If we get to the support, might think that we're going back to the pivot point if we bounce. If we get the resistance, we could go back to the pivot point if we pull back. Again, this is for short-term trading. So I go down to the 15-minute chart. You can see this area here. That was the previous day, and this is the mathematical equation. It's been a pretty quiet day here in the dollar Norwegian krone. So you can see not a lot going on there. But if I pull up another chart, maybe something a little bit more volatile, let's go with pound yen, maybe, or pound Swiss. Pound Swiss is pretty volatile. So, you know, you can put, depending on what the broker is that you're using, or I should say the indicator that you're using. Some of these brokers will put these indicators in, some of them don't. This particular broker does, so I'm going to go ahead and put pivot in, and you can see this is a monthly candlestick chart, so it's going to scrunch up real quick because it's based on the previous month, right? I go to the week, spreads out, and go to the day. At that point, the day is trying to figure it out over the previous period, 4 hour, 1 hour. Okay, so now we get into more of a day trading mode. Let me go ahead and put those period separators on there. So each of these is a full day. Pivot point based upon the calculation is right here. We did reach towards it and then pull back. Whether or not you can attribute that to the pivot point or just the fact that the market got tired, I don't know. It's probably asking a lot to assume. But a lot of these day traders, you know, they're looking for 10 and 12 ticks. They're not looking for major moves. One of the biggest issues, though, it's going to be what happens if you take profit at the pivot point and it continues to blow through all of these. Because structurally speaking, there's resistance up here. I can see that. So why take profit here when you could take it here? Now, it comes down to your time frame. If you are looking for short-term trades only, these things can work. But again, it's kind of taking an old tool from the futures pits and trying to cram it into a 24-hour market. You can have success with it, but you have to be able to sit there and watch the charts very closely.